Hello and welcome to Work Tools 123, the tools you really need at work. This video will discuss the three primary financial statements used by most businesses: the balance sheet, the income statement, and the cash flow statement. Let's take a look at each of the statements in turn. First, the balance sheet. The balance sheet is really just a summary or snapshot of the business's financial standing at the end of the accounting period. The income statement or profit and loss statement just takes your sales or revenue for the period that just ended and subtracts out the expenses and determines whether you made a profit or loss. The cash flow statement just summarizes how much cash you took in during the period and how much you sent out. Now, just bear in mind that cash flow is different from profits. You can be bringing in a lot of cash and not be profitable. We're going to talk a little bit more about that in a minute. Now let's look at some simple ways to think about each of the three statements so you can remember what they do. The balance sheet tells you, after I subtract everything I owe, my liabilities, from everything I own, my assets, what am I worth? It's as simple as that. I take everything I own, my assets, and I subtract out everything I owe, which are called liabilities, and that leaves me with my net worth. Now for the income statement. After I subtract my costs, my expenses, from my sales, also called revenues, am I making money or am I losing money? Am I making profits or am I showing losses? Now for the cash flow statement. After I pay all those invoices laying around and other expenses and take in money from sales, loans, and investments, how much cash do I have on hand and can I pay my bills? Let's take a look at a simple example of how an entry in one statement flows through all the other statements. Here we have income statement, a balance sheet, and statement of cash flows, and they're all for the accounting period that ends on September 30th, 2013. So let's just take a look at a very simple example. If we had $100,000 of sales, right, and no expenses, which isn't possible, but let's just assume it did happen. We got $100,000 of sales. Since we have no expenses here, that would flow right through to the bottom line and you'd have $100,000 of net income or profit. It would also dump $100,000 into your cash account on your balance sheet, and you'd also have $100,000 of cash ready to spend in your statement of cash flows. So you have a very simple example here. It shows you how $100,000 in sales, assuming no expenses, which isn't possible, turns into $100,000 in net income, produces $100,000 in cash on the balance sheet, and gives you $100,000 that you can spend out of cash flows. Now let's take a look at what happens when you add some expenses, which is really a lot more realistic, right? So let's assume that your cost of goods sold here, that you had $30,000 for that, and when you enter in the $30,000 for the cost of the goods sold, that goes into your accounts payable bucket over here. This was accounts payable as of the end of the accounting period, September 30th, which means that you had invoices for that amount, but you hadn't paid them yet. It's very important to understand because you haven't paid them yet, so you still have the full $100,000 over here to spend, even though you owe $30,000. Things like invoices from suppliers go into the accounts payable bucket. Now let's assume you had some operating expense too, and let's just say that that was things like wages, right? And you hadn't paid out those wages yet. Things that you estimate you owe money for, but for which you haven't received an invoice, go into the accounts payable bucket. That would be things like the payroll. So your $30,000 cost of goods sold becomes $30,000 accounts payable. $17,000 in wages becomes accrued expenses payable over here in the balance sheet. So here your net income of $53,000 matches your retained earnings of $53,000. But since you haven't paid out this money as of September 30th, you still have $100,000 of cash in the bank ready to spend. But very importantly, you need to remember and you need to know that $47,000 of that is committed. That's it for today. Thanks for visiting Work Tools 123, the tools you really need at work. See you next time.